Now, has the market run too hard is perhaps the big question you could be asking yourself. Seeing all red across the board does mean that perhaps investors are taking money off the table and feeling that recent rallies to record highs have been perhaps overrun, and it's time now to take some profit home. And that is exactly what has happened, particularly out in Asia, seeing negativity across the board there. The biggest faller was the Hang Seng out there in Hong Kong, going down 1.6%, so a big faller across that market picture, 480 points or close to that really being lost in this Asian market picture early this morning. A similar fall in some parts of the US market, while even in Europe we're seeing negativity across the board there. The big fall is the CAC 40 out in France, going down more than 1% in this lunchtime trading picture. Similar falls as well for the FTSE 100 and the DAX, that's in Germany and of course out in England as well. So certainly does tell you a sense then that market participants perhaps taking home a few gains. More worries maybe about the economic aspects of the globe as well. What happens from here on in? How quickly will the rest of the globe recover is also a big question. So locally we're also down below 64,000 points. We're around just 0.4% weaker, headed towards 0.5% in fact in terms of that weakness. 267 odd points being lost on the JSE All Share at this point in time. Some of the big losers, financials, 2.4% down today, and that's because the banking shares themselves have lost out more than 3%. That is a big fall, folks. That is a massive fall for the banking counters, and they'll rank among the big losers as well today when one takes a look at this red board, which does include the likes of Hoskins Consolidated Investments as well as Long for Life as well, which have fallen more than 6% each. In terms of positivity though, we do have the industrials managing to tick higher. The tech counters have certainly been of keen interest over the last couple of months as well. All of 2020 for the most part really, and that has filtered through into the likes of Naspers on the local front, the likes of Process as well, which of course are big influences on where the market goes to on the local front. We're also down then when it comes to resources, more than 1.5%. In terms of positive companies, I noted Process a little bit earlier. Well, that's gone up 3.6%, so indeed following through and helping that industrial picture tick a little bit higher there. RDI is also up, while Cartrack has also moved up more than 18% today, so big increase there. It's at 80 Rand a share. Weakness unfortunately for the local index today. We've gone beyond 15 Rand again. We're at 15 Rand and 9 cents. We're more than 1% weaker. This is a big fall in the context of where the market has been sitting of late. We had been at 14 Rand 80 and 14 Rand 90 odd and hoped to perhaps level out at those levels, but it doesn't seem to be the case. Against the European currency there, 18 Rand 36. We're 1.16% weaker there, with the British pound also 0.5% weaker as well, so not doing too good on that front. The Brent crude price has fallen below $55 a barrel for the first time there. Key concerns still around demand globally. If the rest of the globe does not begin to open up as quickly as one would have hoped, it means that demand for things like Brent crude oil won't come to the fore, because airplanes won't be moving, cars won't necessarily be going as often as one would have hoped, which means that demand for fuel begins to waver and that price goes down. That's why we're down 2.33%. Platinum and gold prices also feeling the pressure today. Let's have a chat then with Warwick Lucas from Galileo Capital as we unpack this market picture. Let's quickly just start off with this Rand picture, Warwick, if you don't mind. We're sitting now, what is it, more than 1% weaker at 15 Rand and 9 cents. One would have thought that maybe it was the interest rates decision from yesterday, but surely that can't be. Where's this weakness coming from? Is it dollar strength?
I think it's a mix. I mean, bear in mind, of course, that we'd seen a very strong rand earlier in the month, Arabella, in the order of 15.5, and weakening once again to about 15.5. So I think one needs to put these zigs and zags within their context, and I think overall the hold by SAB, obviously a small underpin to the rand. So I wouldn't think though that that's going to come through too much more. And the main point being and supporting the rand is the appetite for South African assets, particularly some bond appetite coming through. Foreigners, they're not too concerned about local issues such as load shedding, etc. They really just want to know, are they going to get a real return on their money? And when they buy South African bonds, that is certainly what is on the table.
Yeah, it certainly does look that way with our bonds, as you said, still looking very attractive in this market. All right, very quickly, some other news, particularly on the equity front. Locally, we saw some retailers coming out with some positive earnings news. That's bound to help the market a little bit, right? It does mean consumer spending has begun to perhaps tick up then.
Well, certainly we've seen some nice results there coming out from Mr. Price. I mean, their volumes overall were actually slightly down, but very much less so than the overall fall that we saw in GDP. I guess part of it was that the value proposition that Mr. Price has, i.e. it's well positioned in terms of where it faces on the in consumer profiles. I mean, that value proposition is probably going to be somewhat more defensive under the circumstances of a consumer that's obviously very seriously stressed indeed.
And then on the other side, you also have the mining companies coming out with a little bit of information, right? Not so long ago, Sibanye-Stillwater saying that things are actually looking good for them when it comes to production, particularly in the second half of the year. But then you also now have Goldfields getting a new CEO, Chris Griffith, said to lead that big mining company. It's an international gig now for Chris Griffith.
The economics for the gold mines have been quite good in the last year or so in terms of the actual prices. Naturally, the challenges of maintaining production and staff levels have been very severe. So it's taken some widening of margin to actually offset all of those pressures, along with the load shedding. And in terms of Chris Griffith joining Goldfields, I think it's an interesting and probably positive development. He is an executive with both excellent experience in deep level mining and of course in change management as well. So it's probably quite a nice acquisition for Goldfields.
Yeah, very interesting, I thought, as well, just with regards to their future and just what Chris Griffith did at Amplats as well for about 7 years was fairly interesting also. All right, very quickly, that oil price then dipping below $55 a barrel. Demand questions, of course, will certainly be in play here. Did it perhaps rise too quickly, expecting a little bit more than it should have?
Well, I think it's really been looking for where is the global economy going to go, and obviously the hope is that with the clean sweep that the Democrats have in the US, that acts as a trigger for pushing the fiscal programs through. I mean, the kind of spend that's being booted around certainly looks like quite a large number, but obviously we need to see proper traction now in the vaccination programs, because stimulus is one thing, but it's very short term. You actually need to see economies returning back to confidence, and it's necessary that vaccination restores that confidence.
Yeah. Warwick, appreciate the time, but thank you so much for it. Though we'll continue, of course, chatting with you throughout the year. And next Friday, still another day. The markets continue to turn and tumble today. Down they go for the local index as well, unfortunately. Warwick Lucas is from Galileo Capital. That brings things to an end then from me here at the Johannesburg Stock Exchange. Thank you so much for joining me this afternoon. On Point still continues, of course, right after the short ad break. Do stay with us. From me, though, and the team here at the JSE, we'll see you on Monday. And remember, that's where the buck stops.